We apologize for this brief interruption in the show. As many of you likely know, the Higher Standard podcast is officially sponsored by TRANSCEND Company. TRANSCEND has been my longtime provider for both testosterone and peptide therapies, but they offer so much more. Whether you're interested in health, wellness, or longevity, it all begins with you getting your blood work done. A lab draw will help you get the numbers and establish your baseline. You can go to transcendcompany.com/THSP. That's transcendcompany.com/THSP. Or you can click the link in the show notes on any streaming platform and on YouTube. Fill out your information, and one of the representatives will contact you to get your journey started today. Now back to the show.
I can tell. You know what I can tell? You're ready. You rock more than one bracelet on your right wrist.
No,
that's when you're like, okay, it's game time.
No. Sarah has messed my wife up.
Sarah
messed my wife up. My wife is now hardcore into like crystals.
Yeah,
brother, on windowsills in the house now. She's rubbing them. Apparently, the black matte one, the black shiny one, this brown one all have different meanings and purposes.
Men's
and values.
bracelets must really be popping off right now because my wife's like, "Do you want to get a bracelet?" I was like, I've never worn one.
I've always had stuff on my wrist. Always. How you gonna make that sexual, bro? I'm just saying, I always have stuff on my. You know what? I can't have a conversation with you from a serious adult perspective anymore.
Welcome back to the show, everybody. We got a good episode for everybody today. Oh, wow. On me. There you go.
All right, yeah.
So we're going to start off the show. We're going to talk about, are we in a stock market bubble? What are your thoughts, Chris?
I don't know that it's a stock market bubble, but I think we are seeing something manifest now that is clearly going to burst. That being said, the stock market's the easiest thing to point to. You're talking about the S&P hitting all-time highs, the Mag 7 all-time highs. You got a lot of things in the stock market that seem to be at unprecedented numbers. And to me, whenever I see that, it's concerning.
Right. So let's first get into what is an economic bubble, right? Simply put, it is when prices of assets like real estate or stocks rise so fast beyond their actual value, and when it's driven by excessive speculation, right? And why do they call it a bubble? Because I've never seen a bubble that lasts forever. It suggests that it's going to burst, right?
Unless you're a Kardashian, yeah.
What do you mean?
You know. Those bubbles stay around until they are artificially deflated, I guess.
Okay, yeah. I see what you did there. Yeah. Well done. So here's some examples of some economic bubbles from the past, some obviously more notable than others, but these are over the last 100 years. First one, the 1920s stock market, the bubble which led to the Great Depression.
So there was a rally in the stock market, October 29th, 1929, Great Depression, October 30th, 1929. The press was all like, the market's back, and it was recovery the next day in the press. It was interesting. Mm-hmm. Looking back on it, mainstream media was clearly trying to change the ether of the sentiment for the market and get people back online. But the reality was the market was hurting, and I think the economy, frankly, was damaged for quite some time after that.
So one thing to really note here, and what everyone should know, is this was all started because of Fed policy. Right, it was post World War I, mm-hmm. Right? So they were trying to stimulate the economy with low interest rates, make borrowing, less expensive for people to really go out there and stimulate the economy. There was inventions like, new automobiles, the radio. There was a lot of optimism in the market. So there was a lot of funding happening, which ultimately rose the prices of stocks, which ultimately caused, a bubble to burst.
And there's a lot of people in the markets right now that are talking about how similar this is to what we're currently living through. You have an unprecedented pandemic, artificial interest rate deflation. You've got stimulus, PPP. All this money flooded the market, right? Quantitative easing versus quantitative tightening. And what happens is when they ease, they put money into the market. And we had people have tons of savings, unprecedented levels of savings as a result of all these things. And some people were actually making more money on an unemployment with stimulus than they were at their normal wage jobs. And that's not to discredit people who have different jobs and different positions in life, but certainly it led to an influx of cash and capital in the markets, and people spent it. Now, that money is all gone now, but the economic impact, the change that we made with all this free-flowing money had a very similar effect. You've got a stock market at all-time highs right now. You've got the Mag 7 leading the way, and we'll get to the dot-com bubble next, where there's some corollaries there as well.
Right.
I think the problem for most people when they think about bubbles is they tend to think about the last one they lived through. And right now, that is the Great Recession, which was a housing bubble. Now, that is very, very rare, believe it or not, but it was the most painful thing in recent memory for most adults, right? Because it happened in 2007.
Right.
And that was the last significant recession. Now, clearly, there was one in 2020, which was also a recession. You had the COVID recession in that period, but it wasn't quite as tangible to most Americans the same way.
Right, exactly. So there's going to be a common theme amongst all these examples, which we're all going to obviously put it in a nice little bow for you
Are we?
at the end of the show. That's what
We're
we do
nice
here.
bow guys now?
That's what we do. We come full
Okay.
circle.
Well, all right.
Yeah.
That's
So next up was the dot-com bubble that Chris just alluded to in the late 1990s, early 2000s, right? It was the rise of the internet, a lot of startups that came up. I think the most notable one was, I think, pets.com. That one was online pet supplies,
yeah.
right? There was actually another one that what was it? It was Webvan. Okay, this was an online grocery company that's like basically Instacart now, but it just failed back then.
I bet the former founders are like, fuck, man.
We're too early,
We were
man.
this close.
We were this close.
We were 20 years too early, man.
Right? So again, in this example of the dot-com bubble, there's a lot of optimism, right? Something new came around, like the internet. So there was a lot of speculation. A lot of venture capitalist firms were heavily funding all these tech startups, right? And
Not too dissimilar from what we're seeing now with the Mag 7 and AI. AI is boosting everybody's stock price. Ooh, AI is going to improve things? Oh, you have AI? Let's talk about AI.
if a company has an earnings call, or if they're giving out some forward guidance, they're all dropping AI. It's like they've been coached to say AI like 100 times on the call. And if you don't, it's like you're asked out.
And the worst part about it is you can tell when people are throwing out like buzzwords about AI, but not actually understanding the technology and the implications to a significant level. I do use AI a lot, and I can tell you most people who say they're expecting it to change their business are full of shit and are not actually using it.
Yeah, exactly. So you can see, right, how if there are venture capitalist firms that are going to be heavily funding these tech startups or these companies, right, when they get infused with all this capital, right, it allows better like growth strategies, a lot of marketing plans, and they can really grow. And you can see how obviously when venture capitalist firms are funding these companies, their optimism leads to other people's optimisms that really influences everyone's behavior. So you can see how companies continue to rise and grow. And then here's the other problem with this too. Just like any other market, venture capitalist firms are constantly outbidding one another. So they're driving the prices up.
Yeah, so basically, for those of you who aren't ingratiated in the market, they typically do Series A, Series B, Series C, and whatnot until they eventually go public. And the rounds of financing, the capital they're able to bring in from venture capital, the money they're able to bring in, sets a valuation. And the more money you bring in, the higher your underlying valuation. So a lot of these companies will get a Series A, an initial funding round. They'll get a Series B, a larger funding round, because the progress they made at the Series A until then. Usually it's a lot of the same early stage investors in the Series A, and they get more and more stock with more and more money in this company. But it signals to the market, okay, hey, here's a benchmark for how valuable this is. What they do is they go, okay, let's say a similarly situated company, what's their trading multiple? What are they looking like? How do you compare this company to that company in its funding round? Basically suggests that it's got an asset valuation of X or of Y. And then eventually when it goes public or somebody buys them, everybody who put money in a venture capital firm gets paid, so long as obviously it's successful. Now, there's a lot of them that are not successful. That's why they have very diverse and big books. But when they are successful, it is a huge turn of money for these guys. It's a big deal. So it's a big money business, but that business can ramp up these values in companies because people expect there to be so much more value coming on the horizon because all these big names are in them.
Absolutely.
Not too dissimilar from what we're seeing in the market now. Everybody's behind the Magnificent Seven. Everybody's talking about NVIDIA, right? Everybody's talking about how these companies are going to change the landscape. They have AI and they have all this new chip technology, but they're all tech related.
You can easily see the correlation there, right, with the start of the internet, or the rise of the internet with the dot-com bubble, especially,
100%.
right? It's like there's a lot of similarities there where, okay, we see this new technology, but how is it actually going to be implemented on a day-to-day basis, right? So there's that. So now back to Chris's last example is the housing bubble in the mid-2000s, which we obviously know is a recent history that resulted in the 2008 great financial crisis, where home prices came crashing down due to low lending standards and low interest rates.
Yep.
Right?
Synthetic hybrid mortgage-backed securities,
subprime loans, right?
subprime loans.
You may have heard that. You may have heard that before. Subprime loans just means ultimately loans to individuals with like low credit scores, right?
Yeah, and a lot of the things, it's interesting to see what the banking ecosystem is kind of living through now. Basically, up until just recently, the only thing that really took banks and lenders down were loans that went bad, right?
Mhm.
You made bad loans, people didn't pay you back, then you had all these defaults you had to cover because these people weren't paying you back. That was the biggest risk to institutions that made loans. Well, now the biggest risk is not loans going bad because a lot of these lenders learn from their bad behavior. And there was a Dodd-Frank Act, which came out with the ability to repay rule. So banks got really, really tight. It's a very different landscape when you try to get a loan today than it was back then.
Right.
It was a lot easier back then. You could literally sign a document with stated income saying, I earn X, give me this money. I'll make the payment.
Right. And I guess people were going out there and constantly buying all these properties because there was a level of optimism, right? That's the recurring theme here. There's a level of optimism that home prices are going to continue to go up. Everything's going to be fine. Nothing's going to go wrong.
Yep.
Right. And ultimately what happened? Foreclosure started to go on the rise. Next thing you know, 2.9 million homes came online, meaning they were foreclosed on and they had to be sold, right? When there's that much supply that comes online at once, the values start to come down. For a reference point, right now, currently, there's only 1.6 million homes listed for sale. So whatever number of homes that were listed for sale at the time, add an additional 2.9 million on top of that, that drove the prices down.
And it was a big pivot. But I think a lot of people go, okay, Chris, we have housing at an all-time high. There's all sorts of things, and we'll get into some of that data later on in the show. But is this a housing bubble? And I've always said no. But don't make the mistake of thinking that Dave Ramsey logic is the normalized logic. Oh, housing prices are going to go up every year for the next 5 years. That is not a good thing, and it should not happen. And we're going to talk about the shelter component to inflation, which is a big part of tonight's conversation, because you'll figure out when we go through the analytics that if shelter does not come down, you have a fundamental problem that is going to be catastrophic for the markets, the stock market and the real estate market. Do I think there's going to be a housing bubble crash? No. Do I think there's a bubble here brewing? Yes, I do. But it remains to be seen what will be the catalyst and what will be the first thing to explode. Now, if any bubble explodes, it typically has reverberating effects into other markets, right? If there's a housing market crash, the stock market takes a hit. If there's a stock market crash, the housing market takes a hit. So these things aren't necessarily mutually exclusive, but we typically refer to them in the past looking backwards as the initial catalyst. In the 1920s, stock market crash. Right? The dot-com bubble was also a stock market crash.
Right.
The housing bubble was not really a stock market crash. It was a housing crash, but there were certainly implications and a lot of bank failures along the way.
Right. And it's been well documented, and you could just, fact check us and go back and look it up, that the stock market right now is being propped up by the Magnificent Seven. Okay? And if that anticipated growth through AI doesn't come to fruition, right? And there is real overvaluation right now with all these companies. Keep in mind, if that's the case, during a time where the Fed is actively trying to slow down the economy.
Yeah.
Okay? Like in those other examples, they were not actively trying to slow down the economy, right?
Yeah.
They were actually trying to stimulate the economy through that process, which increased all those values, right? Right now, they've been actively. So why there's still all this optimism out there? You got stock market at all-time highs, but buy now, pay later services are also booming.
Yeah.
Credit card delinquencies are up. Credit card balances are up. Why are credit card balances going up if people aren't able to make ends meet and they're having to use their credit cards? But we got the stock market booming. Why is there all this optimism, right?
Well, because people forgot. I mean, look, typically you get a recession every 7 to 10 years, right? And it's a sine wave. It's prosperous economy, recessionary economy, prosperous economy, recessionary economy. Well, we haven't had one in double that now. It has been over 14 years since the last recessionary economy. But it's almost 20 years now.
Right.
So 7 to 10 years times 2, 20 years, you're looking at a scenario where this is getting to the point where people are literally coming into adulthood. They grew up, they started working in the first job, let's say 18. Almost 20 years later, they're at 38. They're going like, fuck this, I'm good. I've lived through this economy. I've lived through economies. I know what I'm talking about.
I think they say I'm Gucci.
Look, I don't want to be, labeling anybody with my vernacular, but I'm down. It's lit.
Yeah. I'm with it.
Yeah, I wear tube socks too now.
No.
I do. Yeah, to the gym.
Tube socks?
Yeah, like,
That's a thing?
yeah, because, I don't wear, like, I wear, like, no-show socks with most of my shoes.
Mm-hmm.
But the kids these days, no, that's not cool anymore. It's
That's
back
not
to the
cool.
tube socks.
Yeah.
Halfway up the calf, bro.
And it's got to have the designer logo on it, right?
Yeah. Mine's got the Nike, like the
swoosh.
1980 swoosh. Yeah, I'm in. Deep.
Yeah.
I know you see me in the gym, kid. You're like, man, that guy's young. Nope. No, he's not.
No, he's not. So what is causing I guess the Fed to maintain these levels where they're at?
Well, some would say the Fed has been overly communicative, but look, they're trying to hit a target rate of 2 to 3% inflation.
Mm.
They've specifically targeted 2%, which I thought was weird from day one.
Yeah.
Why they've deviated from the historical standard of 2 to 3% and focused so much on 2% is still unclear. And Jerome Powell has never spoken to that, and neither has any other Fed president for that matter. So, but they're targeting that. And now they're sticking to this philosophy of getting back there for a good, healthy economy. Now, I would make I've got some interesting arguments that I could point out to the contrary of some of the data that we've shown. I could argue that the Fed is saying, okay, look, we should get down to 2%. But I could easily say that's wrong. You've had 9% inflation. You've had 3% inflation. You've had all these inflationary numbers all above 2%, obviously. That's hence the reason we're here today.
Mm-hmm.
That means prices have increased at 9%, at 2%, at 3%, at 4%, at 5%, all along the way. Prices have never gone down.
Right.
I think the consumer needs the price to go down. I think a recession could be good. I think a bubble bursting, while painful.
Because the only other option, right, is for wages to come up drastically, and that's not going to happen.
I just don't see the world where that happens.
No, that can't happen.
Right?
So
how do you reset and give America a little bit of breathing room? You have to have a deflationary economy.
Right. Us going through this process right now is like putting a Band-Aid on an open wound.
Yeah, because prices are still going to go up.
Yeah.
They're just going to go up slower from here than what they had historically.
Yeah.
So unless your wages go up by 5 or 7 or 10% every year, your wage increase will probably match inflation if they hit their target
Which
rate.
is terrible, right? During a time like this where we've seen the number of layoffs, people are, if they're listening to this show, they're actively waiting for it to roll into their sector. So maybe they're going to stay put and not hop into another job somewhere else because they're afraid that they won't have any stability at the next place, right? So you can't even go jumping from job to job right now because you need the stability more than ever.
Yeah, at least I think that's prudent. I mean, everybody's got their different opinion here. I mean, clearly unemployment being still below 5%, you've got a slow amount of transitory migration in the market from job to job. So there still are jobs for people looking for them. But I think that's a merry-go-round that you don't want to be, getting off of when the economy slows down. Because the last thing you want to do is be like, I can get a job, it's no big deal. And then you're looking forever because this thing all came to a stop.
Yeah.
So my personal philosophy. Shall we jump into the data which supports all of this?
I think so.
Before we do that, welcome back to the #1 financial literacy podcast in the world. It feels like home. It's good to have everybody back doing a regular show.
This is home court.
Yeah, this is the higher standard. Sitting next to me, my partner in time, the one and only, the people's champ, Saied Omar.
Oh, thank you, my man. Sitting next to me on my left, my partner in crime, Chris Nahibi. Welcome back to the show, everybody.
And behind the now arguably functioning new setup, our producer, our man with the magic little chubby digits, the one and only Haroon.
Digit.
Oh, okay. Well, I mean, if you got one big thumb, that's fine. You like Hellboy?
What's up, man?
Not much, man. How's it going, guys?
We're doing good.
Damn, this mic is far. I have to literally bend over for this.
Do you want me to get you one of like the mic arm thing so you can bring it real close to your mouth? Put it in your mouth?
We'll see.
On the arm?
Yeah, it's gonna look weird with the camera coming up, huh? If I have to keep leaning in.
Yeah, I've got extra mic arms for you to put the mic, in and around your mouth.
Yeah, that works for me. Just not too close.
I
Just
don't
the
care.
tip.
Okay.
Just
You still want the big fuzzy top on the mic, not the little pointed one, right?
Dark one, yeah.
Okay.
dark one.
Duly noted. I'll make sure you have your proper equipment for the next show.
Perfect, thank you.
Yeah, no problem. Back to our regular scheduled show, shall we? Okay, so we're going to talk about inflation. Okay, there's some big prints that came out that I think are important to walk through. We're going to talk about how inflation, frankly, has seen some challenges all the way back to January 2021. We'll explain what that is. We're going to get into rental vacancy. We're going to get into housing market data. We're going to talk about household debt, as Saied alluded to earlier. And let me tell you, it is a grim and gory picture there. We're going to talk about credit card delinquency, jobless claims, and then we're going to talk about New York City rents, which I think are important to note. And just as a little bit of a primer to that, it is now officially more expensive to buy a home than it is to rent in all 50 states.
I did see that as well.
That is a compelling fact.
Right.
If you take nothing else from this show, besides the fact that Haroon needs a big, dark, fuzzy mic in front of his mouth, that is the detail you want.
Yeah, that's the one you
Okay.
want. So
And then-
don't go look to buy right now is what you're saying.
I don't think now would be economically viable for most people. For those in the younger demographic who have said routinely, look, it doesn't make sense to buy, I'm just going to rent because it's cheaper and I have better cash flow, you are actually accurate right now.
Right.
So that's a real thing. So this from Yahoo Finance. Inflation cools off in April. U.S. consumer prices cooled during the month of April, according to the latest data from the Bureau of Labor Statistics released Wednesday morning. The Consumer Price Index, or CPI, rose 0.3% over the previous month and 3.4% over the prior year in April. A slight deceleration from March's 3.5% annual gain in prices and 0.4% month-over-month increase. April's monthly increase came in ahead of economist forecast of 0.4% uptick. The annual rise in prices match estimates according to data from Bloomberg. So what that all really is saying is data came in where everybody thought it was here. So nobody was freaked out about inflation, but there was a hiccup. On a core basis, which strips out the more volatile cost of food and gas, prices in April climbed 0.3% over the prior month and 3.6% over the last year. Cooler than March's data, but measures were economists. Well, I shudder to say that they met economists' expectations because I think in a lot of ways core inflation isn't moving quite the way they wanted it to, but inflation is. But as kind of a primer here, if you look at the chart that Haroon pulled up and just got rid of, there it is. Good man. You're seeing it's flatlining.
Yes.
We're seeing some peaks and valleys, but effectively it's been flat. And inflation being flat right now means that the Fed is going to have to hold higher for longer.
Right. This is one of the metrics now. They do like to look at another inflation data point, but this also is another one that they look at. And something that I think should be noted, right, is the Fed, they're required to lay out their projections on how they see themselves acting and how they see things playing out, right? That gets updated approximately every 3 months or so, okay? The last 2 times they released those projections, they had come out and said that there were going to be 3 rate cuts this year. That's what everyone's been hanging their hat on, okay?
Yeah.
However, since that last projection, all you've been hearing from them is, I think we're going to have to hold rates higher for longer.
Mm-hmm.
What does that mean? In my mind, that means don't expect rate cuts anytime soon. There's still a chance at 3 rate cuts at the end of the year, but it's probably going to be 2, no longer 3. Now, this next meeting on June 12th, right, when it comes out, they're required to lay out a new set of projections.
Mm-hmm.
So everyone's going to be tuning into that. And data like this is exactly what they're going to be pointing at and looking at, because this isn't cooling fast enough. This is not something that's going to be giving them confidence that it's headed in the right direction.
It certainly was cooling at a faster cadence, and then it kind of flatlined several months back, and I think that's really freaked people out of the market, and this is why you're seeing the rhetoric going from, hey, guys, look, you know, the Fed's they're going to cut rates. They're not going to hold this long. So, oh, shit, it's flatlining. They're going to hold rates. They're going to hold rates a long time until you've seen some more drops. Now, here's something to think about. The Fed has employed a lot of strategic activity to get inflation down. They increased rates at an unprecedented cadence with this kind of bell curve methodology. 25 basis points, 50 basis points, 75 basis points, 75, 75,
right.
50, 25, right? All that was done. And that all drove inflation down to where it is today. But they still need to get it lower.
What's
How
keeping
do
it?
you
What's
get it
keeping
there?
it? What's keeping it from getting lower?
We're going to get into that, but it is shelter. And this is something that you and I talked about from just a mathematical perspective. It never made any sense that nobody was talking about this as a problem.
Right.
Housing, all the pundits of the real estate professionals who were saying, hey, this is going to be an issue, housing's going to be fine, housing value is going to go up. We're going to get into exactly why we knew that was wrong and why we knew we were going to be where we're at today here shortly. But before that, let's get into the Kobeissi Letter. Shocking stat of the day. Inflation has not fallen in a single month since January of 2021, according to Zero Hedge. This means that overall prices are up over 19.5% in less than 4 years. And this is what Saied and I were talking about when we said a recession, a deflationary economy could be very, very good for a lot of Americans. If they stay employed, that relief of prices going the other way could free up a lot of personal cash flow for people. Because right now, 19.5% in increases in prices on average over the last 4 years, that's a big increase.
I guess the fear for the Fed also will be, though, is it'll free up a lot of cash flow. Consumer economic behavior, we've seen. We know how it plays out. Unfortunately, people aren't the most responsible. If they do free up some cash flow, what are they going to do with that money, right? You would like to think that they would start to pay down some debt. But I got a real problem. I'm starting to think, I was actually thinking about this today. I was prepping for the show.
You prep for the show?
Prep for the show a little bit. I know it doesn't seem like it. But I was thinking about this today. Anytime we talk data on this show, okay? Some key things that we always talk about. We always talk about the increases from month to month.
Yep.
Right? It's good to know.
Year over year.
Next, we talk about year over year, right? Because that's how the Fed likes to look at things, year over year. And then the last one that we always like to look at is pre-pandemic levels. Here's my problem with pre-pandemic levels. That was 14 years of artificial interest rate deflation. We're comparing data to pre-pandemic levels, a time where the Fed policy was low. They were stimulating the economy. Why are we doing that? That's not what they're trying to do. That time has now come and gone. I think that needs to come to an end. We need to stop looking at it because it's never going to get back like that, or at least not for a very, very, very long time.
I tend to agree. I don't like the pre-pandemic, post-pandemic dialogue anymore. I think that I still get questions, frankly, from that context, and it bothers me because it's like, dude, like that was so many years ago.
You're living in the past. That's not coming back, dude.
It's not. And to your point from the Kobeissi Letter, that's an average of 5.5% per year of increases in price, effectively wiping out 1/5 of the U.S. dollar's purchasing power. That is huge. We have not had a year-over-year inflation print below 3% in 37 consecutive months.
Which is what the Fed's trying to target.
Right. They're trying. So for almost 4 years now,
Mm-hmm.
right? Certainly over 3.
Yeah.
You've got a trend that's not been where the Fed wants it to be in order to say, hey, you know what, we're going to back off this economic policy stance that we have now.
Exactly.
That's a long, like, you want me to have a lot of faith in you,
Right.
Fed, because this number is not something we're going to get to easily. And to your point earlier about shelter inflation encompasses both rent and utility payments for renters and the estimated rental cost of similar houses for homeowners.
Okay.
Notably, shelter accounts for nearly a third of CPI, the Consumer Price Index inflation basket, and 40% of core CPI.
Why is core CPI so important?
Because core CPI is what the Fed is focusing on to determine whether or not they are achieving their goal of 2% or not.
Right, exactly. And core CPI, what that is, that's removing food and energy.
Because they're volatile.
Super volatile, right? A lot of things impact them, and it could swing or skew the numbers, right? So they like to hone in on the core CPI numbers. So if shelter is making up 40% of that number, so I think what people don't understand, or if they're listening to this show, they definitely should, because we've routinely, we beat it with a dead horse, right?
I love beating horses.
You do?
Yeah. You can't get in trouble with that, right? Is PETA coming out to you for that kind of stuff?
That stallion?
Yeah, I feel like, yeah.
I mean, the jockeys are doing it, right?
They are. I mean, it's not exactly humane.
It's not, right?
Yeah.
So go after them first. It's a weighted average, right? So it's a portion of the economy that they're taking and they're applying it. So if this component does not come down, it is impossible for them to hit their target.
Yeah. 40% of what's driving the number that they're focusing on has to pivot downward in order to really get a significant move. Other than that, you're talking about 60% of the other parts of inflation are going to come down enough to where this can stay where it's at or increase.
Right.
Shelter can
Yeah.
stay where it's at or increase and still get to 2%. I mean, the math just doesn't work out.
No.
The math isn't there. And to Saeed's point, and we talked about this earlier, the compounding effect. Inflation is now building on previous year's inflation, right? Goes up last year 3%, goes up next year 3%, 3% on 3% on 3%. You're seeing compound interest on your cost of living. That same shit you want from your investment accounts to compound, and oh my God, the power of compounding is it's huge.
Yeah.
Well, guess what? It's working against everyone in America right now.
Yeah, and the only way you can get it to work for you is if you head over to the THS Pod store and get yourself a Compound with Us hoodie, T-shirt. We got to record that video.
What video?
Come on.
The one where we actually...
Yeah, Compound.
Yeah. Probably should do that.
Yeah.
I keep meaning to do it. I sit down to do it, and then I'm like, you know what? Let me text Saeed, and I look at your photos for a while, and I look at pictures of us, and I just get all sorts of off topic. So Haroon has pulled up one of my new favorite housing economists, Jay Parsons. This is an X tweet or exchange, whatever you want to call it. Yeah, the language here is so confusing.
I refuse to accept it.
Elon, help me help you, bro. I want to say what the appropriate language is, but nobody says.
Yeah.
They all say tweet.
Dude, it's part of the culture.
You know?
Do it for the culture, man.
Yeah. Crazy to think, a monthly survey of renters, most of whom likely haven't signed a new or renewed lease in 6+ months, are the one thing keeping inflation outside of the Fed's target range and therefore indirectly keeping rates elevated.
So explain that to people.
So, as a reminder, again, shelter inflation encompasses both rent and rent equivalent. So if renters are now saying, you know what, I'm going to pay this increased rent because it's still cheaper than buying a house, rent is rising. Yet they're renting because inflation has eaten so much into their income, because housing inflation has gotten so ridiculous that now there's more people in the renting space competitive to rent. And there's not a lot of traction in the housing buy-sell space because there's not a lot of just transactions happening.
Mm-hmm.
Now, rents are going up because there's room between the cost to buy a home and the cost to rent. And as long as there's room between the two of them, rent will continue to rise until it just gets more affordable to buy than it does to rent for most Americans. And Haroon pulled up the chart here. You wind up in a situation where, as this number increases, you're propping up inflation because, again, that's 40% of core inflation. That's a third of CPI, Consumer Price Index, in and of itself, not core inflation, just CPI. You are propping it up because that is the biggest contributor to inflation.
And to add on to that as well, if they're not signing or renewing their leases, what people got to remember is this data point doesn't all get reported at once.
So I think this chart's really important, okay?
Mm-hmm.
Because if you're driving and you can't see it, I'll try to do my best to describe it to you. If you're working out, then you know what? Stop working out. Look at the charts.
Look, take a breather.
Yeah. If you remove shelter from CPI, you hit the target's 2% range, the Fed's target range. If you just say, you know what? Let's remove shelter, the 40% in core, 30% in regular inflation. You just remove that and say, let's just look at inflation outside of the shelter component. You are at the Fed's inflation target. The blue line on this chart shows that you're well there. The Fed can sit back and go, we made it. Congratulations. We're amazing.
Can't do that, though.
So all this comes down to one resounding thought.
What?
Dave Ramsey's fucking it up for everybody, man.
What is he doing?
Yeah, if you want to keep housing prices up, blame your realtor.
Yeah, everyone should be blaming Dave.
Yeah, blame Dave. No, you know what? Not all realtors. There's some good ones out there, but I like to generalize. And because Dave Ramsey,
I like to generalize.
Yeah, you know,
I like sweeping generalizations.
I like to be rude to as many possible people at the same time as I can. But that being said, look, it's a compelling pivot. If you remove shelter from this equation, the Fed has been successful. So therein lies the question, do you need a housing bubble to burst in order to hit the Fed's target? Does that need to happen? And the answer might be yeah.
But how are we going to get there? How do we get a housing bubble to burst? Okay. There needs to be an influx of inventory, right?
Yes.
Okay. How is it going to get there? The last time it happened, right, we talked about it at the top of the show, was a rise in foreclosures. 2.9 million how are we going to get there if people have mortgage rates of 6% or less, right? And with some of us here got less than 3%.
2.71, baby.
Woo! I'm gonna brag about that shit.
Yeah.
I'm at 2.99. I think so.
It's cute.
Hey, I'm there. I got a 2 handle.
Yeah, no,
Right? But if people have that and now rates currently are what upwards of 7% again.
Yeah.
Why would I sell my home?
And I am in the camp that rates are going to continue to climb. They're going to stay flat for a little bit, but I think you're going to see them continue to climb.
Exactly.
Even with a rate cut, the yield conversion's got to come out of the inversion. It's going to continue to climb. Here's what's going to happen, okay? You're going to wind up in a set of circumstances where it's just super unaffordable to buy a home.
Mhm.
And as Haroon has conveniently pivoted here too, Redfin data, median home sales price hits an all-time high of $434,000 in the United States.
I saw
It
this.
went up, hit 400 and I want to say 33,000. Then it dropped down. I'm like, okay, good trajectory. And then boing, right back up. Then it started to dip again. I'm like, okay. It's dipping again. Maybe it's that up, down, 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 up, down, up, down. Like up, down, left, right, AB, start, select.
ABA.
ABA, I don't remember. Yeah.
Close. That was
Yeah,
good.
it was close.
You were good.
But yeah, I thought, okay, maybe there's a chance where this will go down.
Yeah.
And then whammy, 434,000, just over our last historic milestone of 433,000 on average. That is the all-time high.
So that's
and
up
with
6.
mortgage rates 7%.
Yes.
That is all-time unaffordability for homes.
Exactly, right?
Yeah.
So that's up 6.2% year over year for people that are trying to track those year over year figures, right? And that's up $13,000 month over month. I got an issue with this. So I'm hearing you're seeing under the comment section. I love going to the comment sections. It's like one of my favorite things to do. Just reading the discourse.
You want all the smoke?
I don't like engaging. I'm not that guy.
So you just like watching the bum fights?
I like watching what's going
contribute.
on. And then you get all these boomers, right, on there.
What is your demographic?
I'm a millennial, bro.
So you get don't act like you're the young guy.
Hold on. Hey, I'm a millennial. What are you talking? You're a boomer.
I'm not. Don't do that.
You are a
Don't
boomer,
do
though.
that. Don't do that.
Right? And they're saying, back in my day, mortgage rates were 15, 16%.
I don't say that.
Okay? And you're like, okay, guy, I understand. It was, so it was really expensive, okay? But still, the home price to income ratio
It was like $12.
it was 4.5 times.
Yeah.
Okay? So the median sale price of a home back then, I think, was $77,000. And the median income from a home was like $23,000.
Mm-hmm.
Okay? I get it. Things were a lot cheaper back then, but people weren't also making as much money. Now, currently, right now, I think it's close to 6 times. Okay? So it's way more unaffordable now. So if price, it's just not the same. It's not apples to apples.
I had a thought the other day, and I don't want to share this and make myself look bad, but I'm willing to take the hit. Okay?
Really?
Yeah. I'm willing to be that guy.
Oh, dude.
I'm
Get
willing
ready.
to be the boomer. Haroon, strap up.
Yeah.
You ready?
Yeah.
You alive back there?
Give it to me.
Scott.
That was very moist when you said it. You hear the moistness in his mouth?
Oh, I didn't do it.
You didn't do it.
I didn't do it. Come on.
You want to go ahead?
I should do it.
Mid-show, go ahead.
I should do it,
Yeah,
right?
go ahead. Just get it out of the way.
If you're listening to this on Apple or Spotify, please head over and leave us an honest 5-star review. It does a lot for the show. We really enjoy it. And if you're watching us over on YouTube, please make sure you subscribe, ring that notification bell. Make sure you hit that like button. Let's get this video out to as many people as possible. Do all the moist, goody good sassafras.
Yeah, I hate it, but it's your catchphrase.
Yeah, it is what it is.
Yeah, yeah.
I hate it so much.
I do. When we grew up as kids, we were like, wow, Billy's dad's a millionaire, right?
Billy.
Yeah, or you'd be like, oh my God, a Lamborghini,
Right.
And now, I know we live in Southern California. I know it's a bit nuanced, but let's be frank, or Billy. Being a millionaire is not what we grew up looking up to. It is more attainable now because we've devalued things and inflation has done so much damage.
Right. It doesn't mean the same thing it used to mean.
No, it doesn't. It used to mean that you were in a sphere of economic influence far beyond most Americans. And while I understand where most Americans' net worth is centered and I understand these things, with the unprecedented cadence of the rising of housing valuations, where most Americans derive the majority of their net worth, more Americans are closer to millionaire status than they ever have been historically before in the past.
Oh, yeah.
These cars that we used to think were unattainable, supercars, you go to the supercar community and they go, yeah, you're not a supercar driver if you're driving a Lamborghini or Ferrari.
Right.
You have to have a Koenig or whatever, or Huaran, whatever. I don't even fucking know these names anymore.
Yeah.
They're so far beyond the stratosphere of like just Lambo, Ferrari.
Yeah, or McLaren, yeah.
Yeah, those are not those are nice cars.
Yeah.
They're sports cars.
But you may have got that with the PPP loan, bro. I don't know.
But they're basically the Mercedes Benzes and BMWs when we were growing up now.
Honestly, I mean, when I was growing up, if I'm being 100% honest, I remember like being in awe of a Corvette. Forget a Lamborghini.
I don't like Corvettes. Can't fit into them.
I just remember seeing it and being like, damn, that's such a. I just remember the round circle lights.
Yeah.
Seeing them and be like, man, that car is beautiful.
I thought it was because you like Prince. Little red Corvette. No?
No, we've established this.
Oh, yeah. You like assless chaps.
Assless chaps.
You do.
I do.
Yeah.
I'm gonna come and rock some assless chaps one day.
There's nothing.
I'll do it for the show. I'll go viral.
More. But how are you gonna do that? You can't sit down with assless chaps. So there's no point.
No, I'll just walk in front of the camera. Come sit down.
You sit down?
Yeah.
Okay.
I'll do it for the show.
No, you wouldn't.
If you do it, I'll do it.
Me? Look, my ass got laser hair removal. I'm fine.
I'm okay with it.
It'll just look like, normal.
Normal.
And Haroon's pulling up
we're not
assless
putting
chaps.
that. We can't put that on.
Have testicles in that?
See,
Like,
we talked about before the show. We're not gonna get flagged, dude.
I just ate 2 bowls of chili.
Haroon, stop. Turn it on. Stop.
Come on, man.
Come on. Jeez.
Jesus.
Even we have standards.
It is the higher standard after all. All right, let's move on. Let's skip the Treasury note bond. I think there's no value in that. And I already kind of alluded to it. So from the Kobeissi Letter, breaking news, of course, total U.S. housing debt increased by $190 billion in Q1 of 2024 to a new record of $17.7 trillion.
These are real numbers.
Real dollars, real numbers. Breakdown of the large categories, because you know what? I love category. What did you just flick?
We had a fly in here. Get rid of it real quick.
And you flicked your jacket?
Yeah, what was I supposed to do?
You're a murderer. Ugh. All right, breakdown of the largest categories of debt. Number 1, mortgage debt. $190 billion added, bringing that number to $12.44 trillion.
And that number is shocking after we now know that 40% of homeowners don't own anything on their home.
Don't owe anything on their home.
Yeah.
That's just incredible. Number 2, auto loans. $9 billion added to a total of $1.62 trillion. Student loan debt, thank you, Biden. Minus $6 billion, total of $1.60 trillion. And I read an interesting stat today.
He stood up for the people.
That student loan debt is approaching all-time highs again. How the
Already.
fuck is that possible?
Well, I think student loan rates right now are all-time highs at, I think, approaching like 8 or 9%.
Credit card debt, $14 billion to $1.12 trillion. Total household debt in the U.S. is now up approximately 25% in 3 years and rising rapidly.
We are fighting inflation with debt.
Yeah. How's that working out for you, America? Well, according to Yahoo Finance, U.S. household debt climbs to a record $17.69 trillion. We got a really colorful chart we can share with you because it's just got all the red, orange,
here's the problem.
yellow, and white.
U.S. households are just taking a page out of the government's book. Oh, I owe this much money? Let me just borrow more money.
Yeah, total U.S. household debt levels increased in the first quarter as already stressed credit card borrowers faced rising challenges. A report from the Federal Reserve Bank of New York said on Tuesday. The bank report, part of its survey of household debt and consumer credit conditions, showed that overall debt levels rose by $184 billion, or just a palsy? I can't fuck. Just a small little 1.1%.
Yeah.
In the first quarter, to $17.69 trillion. Overall borrowing levels are $3.5 trillion above where they were at the end of 2019, before the onset of the coronavirus pandemic, the report said.
Hate this.
Yeah, I know. Mortgage balances were up by $190 billion to $12.44 trillion again, while auto loan levels have increased. Overall credit card borrowing outstandings have increased. And they fell by 14 point something percent, or 14 point something billion credit card borrowings. But I think there's a new number out today that shows that it went back up.
Yeah.
So people were like, oh, hey, look, I paid off some of my debt. Let's go spend some more.
Yeah.
Yeah, it's a problem.
It's a big problem, man. So, what would you recommend for households? Let's say, what like, if you knew somebody that had this amount of debt that they just couldn't manage, and the only asset that they have is like the home that they own,
Mm-hmm.
right? You can't sell your car. You need to get to work every day, right? Maybe it's time for people to hit the reset button because there's no end in sight.
Well,
I don't see a light at the end of this tunnel for some of these people.
The juxtaposition, if you will, that most Americans will ultimately face is, do you sell your home, tap into the equity, and rent for a little bit? Is that going to be cheaper than your current mortgage at a very low interest rate, even though obviously renting is cheaper than buying in all 50 states?
Mm-hmm.
How much cheaper is it?
That's a tough pill to swallow for people. I can't even imagine, being in that position.
Well, I mean, downsizing to a smaller property to purchase a smaller property doesn't make a lot of sense for most Americans because you're getting a 2-3 times higher interest rate.
Yeah, you're probably paying more for the smaller place than you were for the bigger place.
So can you rent for less than your otherwise current mortgage payment would be tapping into your equity? And the answer for most Americans is yes, you can. But then what do you do after that equity runs out? Do you buy? Do you use that equity and hold to save? I mean, it's a gambit. But I think a lot of Americans will find themselves playing that game, tapping into their home equity, paying off debt, and then waiting while they rent for a little longer.
Yeah, and hopefully they correct any, bad behavior that they had with some of their spending.
You would hope.
Because if you're tapping into your equity, that's like one of your last lifelines before having to sell, because that's where most of their net worth is going to be at the end.
But you see the charts that the room pulled up, including excluding mortgages. You got a problem. The chart is, frankly, a 45-degree vertical leap right up into the corner of the chart. No matter how you look at it, the problem is that, look, mortgage debt is huge because housing prices are huge.
Mm-hmm.
Those who were able to buy took on a lot of debt in order to do so. But the debt excluding those mortgages, as Arun just shifted to here, well, it's still going up just as fast. And there's no equity behind most of these assets. You got credit cards. There's no equity behind that. That's just all bad debt.
Right.
You got auto loan. That's a depreciating asset.
Yep.
You got student loans. Well, I mean, it's an investment in your future, but it's not something that's secured by something.
True.
And
And it's not something that you ever be able to, file bankruptcy on.
Yeah. And then I worry about whatever the hell is in other. It ain't good either, bro.
Yeah, man. What is it's so much.
Buy now, pay later, maybe?
I can't all be buy now, pay later. That's wild.
Buy now, pay a lot later?
Yeah, exactly.
All right, I got another one on U.S. credit behind this one. Let's go to that one here. This from the Kobeissi Letter again. U.S. credit card delinquency rates jumped to 8.9% in Q1 2024, the highest since 2011. Uh-oh. Chris and Saied just said there's all this debt, and it's going up, and it's really, really problematic. And now delinquency rates are jumping by 8.9%? Uh-oh. To put this in perspective, the delinquency rates in 2021 were just about 4%. So it's more than doubled. This means that credit card defaults have more than doubled in just 3 years and have been rising at the fastest pace since the 2008 financial crisis.
See, we're putting a nice little bow on it. Full circle.
I didn't take us as bow guys, but I think we are.
I think we're bow guys.
Yeah. Meanwhile, serious credit card delinquency rates of 90-plus days jumped to 7%, also the highest since 2011.
Oh, yeah. Why is that 90 days so important? I know we covered it on the previous episode where we talked about how to get a perfect credit score.
Basically, once you go past 90 days, you are far beyond default. You're in charge-off territory, and you are permanently impacting your credit score in a way that probably can't be rehabilitated.
Yeah, or at least not for quite some time.
Yeah, not for several years.
Yeah.
U.S. consumers are feeling the pain of higher rates and will record high credit card debt as a result. So it's a problem.
It is a big problem. So
Yeah.
it finishes it off with, is the credit card bubble going to burst?
Well, I think there's a compelling case for there being a problem here.
So we've
Share
talked
credit
about
card balances transitioning into delinquency. Haroon, pull up the chart from the article. It's it went from dipping down post pandemic in 2020, since we're talking about the pandemic again,
Mhm.
to popping up,
Yeah.
real up.
So we talked about this, right? So to put the bow on it again, household debt is at an all-time high.
hmm
We got in there. There's credit card debt that's booming. Other right, auto loans. And now we got credit card delinquencies climbing again. It's at 8.9%. Right. Mortgage debt went up 190 billion dollars. Yet somehow
Billions.
billions. That's a lot of millions. Um, and somehow the stock market is booming.
Yeah. It makes no sense.
And it shouldn't make any sense. If anyone's out there thoroughly confused, you should be confused.
Yeah.
You
makes
should
no
be
sense.
wondering what the hell is going on. Where's all this money coming from that's getting dumped into the market?
And I find it hilarious how like crypto like dips its toes in the media and everyone's like, "Oh my god, crypto's back!" And then they're like, "Nothing, silence."
Yeah.
And then every once in a while, someone's be like, "Oh, remember that crypto thing?" And then it says, "Oh my god, it's back!" And then you're
Yeah.
like, "Oh, then it's gone."
Yeah.
It's like this weird like love hate thing. There's all of this talk about ETFs and funds, and it's gonna crypto halving and all this stuff happening, and then nothing recently.
Yeah. I can't remember. Somebody just invested a lot of money into the Bitcoin ETF.
Not me.
Yeah, no, not me either. I mean, I don't see the long-term play there. I'm still against it, even though it's still doing really well. And I got cousins that listen to the show that they love trolling me every time it hits. I think it's back above 70 again.
I don't know.
Yeah, I refuse to follow.
I know that you track it because you want to make fun of people. Which
I don't
want
want to make fun of people, but I want to see it go down. I do.
That's worse.
I do.
Making fun of them doesn't mean that you want them to hurt.
This
you
is
want them
not.
to hurt.
This is not the way, man.
According to Jamie Dimon, it is certainly not the way.
No,
He is not a crypto fan.
neither was.
Charlie Munger, may you rest in peace.
Yeah,
Yeah.
the goat.
Well, U.S. jobless claims. Oh, wait.
There you go.
Morgan Stanley revealed. They look at Haroon doing
Yeah.
some.
Thank you, Odin. Morgan Stanley reveals $270 million investment in Bitcoin ETFs. When I saw that, I was like,
$270 million for Morgan Stanley is like a
I get
rounding
it.
error.
I get it, right? But that making the headlines, of course, they're gonna post it cryptoslate.com.
Yeah, it's not like it's on CNBC, bro.
But it's like that's like them hedging their bets.
Yeah. And then, of course, they do the little picture of the cryptocurrency, coin with a Bitcoin symbol on it falling from the air.
Yeah.
It's raining crypto. Woo! That's not real, okay? No one's like doing the, Scrooge McDuck dive into the cryptocurrency. You know what I mean?
Not right now, no.
All right, so U.S. jobless claims, this from Yahoo Finance, jumped to the highest level in 8 months. Okay, Chris, so now you got highest debt levels, highest housing levels, inflation not moving because of shelter and the rental issues. What else could go wrong? Well, jobless claims could go up, okay? Which means wages will go down, not up, further causing a financial Molotov cocktail of problems looming, or as Saied started off the show, a potential bubble.
Yep.
The number of Americans applying for unemployment benefits jumped to its highest level in more than 8 months last week. Another indication that the red-hot U.S. labor market may be softening. Unemployment claims for the week ending May 4th rose by 22,000 to 231,000, up from 209,000 the week before, the Labor Department reported on Thursday. Though last week's claims were the most since the final week of August of 2023, it's still a relatively low number of layoffs and not cause for concern. Really?
Yeah.
You sure? You trying to convince me or you, pal?
Yeah, exactly.
Yeah.
So jobless claims, why this is important, it's routinely viewed as a leading indicator, right, of what's to come. Because this gets reported every week, right? And if there's a spike in this, there should be cause for concern because that should tell you where the market is heading.
Yeah. Well, Haroon, shall we round it up with the unusual whales on X?
I love this page.
Yeah. New York City rents grew more than 7 times faster than wages last year. The largest gap in the country per Zillow.
Largest gap in the country. Yeah, I saw this. I think Redfin, they every month they post which cities are having the highest outflows.
Mm-hmm.
So for the first time now, Los Angeles has crept into number 1, and New York City number 2, San Francisco number 3, And I got to get the rest of this list. I have it right here. Here you go. Seattle, number 4. Washington, D.C., number 5. Chicago, number 6. All large metropolitan areas.
Yeah, you remember that whole period of time where everyone's like, "Oh my God!" And I'm not an Airbnb fan. Airbnb is driving up rent in New York City. Yeah, they ban it in the city, and guess what? You still got a problem in New York City.
Still got a big
So
problem.
clearly that wasn't it. And then people are like, "Oh my God, everyone's leaving the city. They're tired. They're burned out. There's too much crime. They're out. They're out. They're out. They're out. No, they're coming back.
Mm-hmm.
Rents are going up." But again, this is all contributing to not hitting the Fed's target rate. So if you're the Fed and you're Jerome Powell, or if you want to be Neil Kashkari, and have
First,
your
you got to
hand-
punch Neil Kashkari, right?
Yeah,
you got
that's
that's your punching bag.
Neil, stop talking to the media, okay? And please don't fucking pose behind your desk anymore. You look weird.
It's
all right.
much, yeah.
You look like Kermit without the hair. It doesn't. It just doesn't resonate with the audience. Okay.
Not the look we're going for.
Yeah. Or wear a wig, dude. You know.
Yeah, that's not your look, dude. If you're gonna rock that look, you gotta have a beard, dude.
Yeah, a beard would be perfect for him.
Right.
He'd have the crazy eyes going. He would look like intimidating.
Yeah.
And then he doesn't. But look, if you're them, what other levers can you pull at this point? This is the shit part about the theory. Okay, look, and I know if you're listening to this, you're like, oh, okay, the Fed's got it together. They have a plan. No, they don't. They have no plan. They did their worst possible thing they could do. They raised rates at this cadence that was unprecedented. They did their worst. They're going to quantitative tightening is working. It's doing its thing. And they're going to back off that a little bit. I understand. What are they going to do next?
Right.
What are you going to do to get a change here? Their plan is hope.
Yeah, hope this turns sooner rather than later, right? Earlier in the show, we talked about the Fed releasing their projections, right? Here's the crazy thing about it. They're allowed to have, wrong projections. And, we made a mistake. We're going to modify our projections.
Yeah.
Like when they started this whole thing, they said the inflation that we had been seeing was a supply chain issue caused by the pandemic.
Yeah, then it was transitory.
It's transitory. It's coming and it's going, and everything's going to go right back to normal.
Back to
Okay?
normal. No big
Okay,
deal.
so they got it wrong, right? So they come out, and then they say they acted a year too late, maybe a year and a half too late.
You think?
Yeah. And then they started to raise rates. And at the time, keep in mind, they're required to release their projections. They released their projections saying we're going to raise rates 7 times.
Can we pause for a second and say the implications of acting a year and a half too late? You know how many fucking Fed meetings are there?
Right. There's so many things.
You know how many times you guys got together, hung out in a building, and talked about this shit and said, you know what? Nah, let's not do something now.
Yeah.
And then you want to come out swinging with rate increases? Bro.
Yeah.
You guys fell asleep at the wheel for over a year.
Right.
And you said, let's just put a nice little positive spin on it. You guys said, look, it's not the right time to hurt the American economy. We're going through this unprecedented pandemic. We should wait. Can you at least give us the professional courtesy of saying, we fucked that up?
Yeah, exactly.
My bad.
Yeah, right.
Don't come out being like, we're going to stick to this monetary policy. We're going to be communicative.
Yeah.
And we're going to get to 2%. We're insisting on 2%. 2% is the number.
Yeah.
How about saying, look, we fucked up. We should probably make it 3%.
Yeah, exactly.
It's
like your kid throwing a tantrum.
Yeah.
And then you being like, oh, it's coming and going. Let me just keep feeding him some lollipops. And then being like, oh, shit, I really fucked this up.
He got a sugar rush, little bastard. Now I'm going to punish him.
Yeah.
You know what I mean?
Yeah, it's like, wait, he didn't do it. He didn't cause this. I caused it.
Yeah, but you gave him the lollipops.
It's your fault.
Why didn't you metabolize it better?
Right, exactly. Why'd you eat it after I gave it to you?
Yeah, that's your fault.
You shouldn't have done that.
No. Just because I put you a lollipop in your mouth doesn't mean you have to eat it.
Right.
Spit it out.
You should know better by now.
Yeah, save it.
Yeah, you don't eat your broccoli. How come you're eating this?
Yeah. Well, I don't really eat much of anything anymore.
I could tell, man. You're cutting down.
I'm not. I haven't lost a pound.
That,
I haven't got on a scale.
that's not true.
I have no
That's
idea.
not true.
Yeah.
That's not true. Oh, I had this in here too in case we needed something. This is from CNBC. Fed Governor Waller, one of Chris's favorites.
I saw him today on CNBC.
Wants several months of good inflation data before lowering rates. All right, what you got to take away from stuff like this? Forget like what Governor Waller said, okay, or that he said it. What you should be taking away is he wants several months of good data. Here's the problem, Chief. We haven't gotten a good data print. We still haven't got it. The last one, the CPI one, it was okay. It met expectations, but it's not like, oh, that's a great print.
It's not like Jerome Powell came out and was like, that's amazing.
Yeah, thank you. Well, that's exactly what we needed. They haven't gotten any of that yet. So if he's coming out saying this, so we need several months of good data, you can basically throw July away.
Oh yeah, July's out the window.
July's out the window now. And if July's out the window, then that leaves us with September. I don't even know how many meetings are left after September.
You know what I would love to see? I'd love to see Jerome Powell come out at the next meeting, approach the mic, have his iPad out, have everybody in the room ask him questions, and him do a stoic stance. He look around the room, puts his hands on each side of the podium, and he looks straight into the camera, and he says, "The White House told me I have to cut rates.
Yeah.
We're cutting 25 basis points."
That's what we got to do. I wish one of these reporters would ask him, like, Jerome Powell, you understand in order to get to your 2% target range, housing needs to come down? And see what he has to say.
He's alluded to it in a couple of the meetings where he said that he recognized there'll be implications to housing, but he didn't specifically cite the percentages in the data.
Yeah.
He did understand that there was, quote, housing implications that were there.
Yeah.
Here's the thing is I don't understand. If you're being transparent, be transparent.
Yeah.
You know? But to say that that's not something that you intend and need to happen is disingenuous.
Yeah. And he has alluded to saying that, with rates being held higher for longer, it will, heavily impact low to moderate income earners. So, but it's like, you can't just say that shit in passing and just let it go. Like, I know it's going to fuck them up. It is what it is. Let's move on.
Yeah.
So, anyways, Odin, what you got for us?
Pop culture time, baby. Give it to me.
Yeah, if you stuck around this long, you deserve some.
Yeah.
Let's go.
A little celebratory throat clearing before we get on the pop
All
culture.
right, go ahead, Saeed. You're the guy that
Oh,
knows this better than everyone else.
No, I've been on this one.
You have now. All right. So Sean Combs, P. Diddy, apologizes, falls short for many black women who face higher rates of domestic violence.
This was okay.
I came out strong on this.
Yep.
So I'm gonna. You mind if I?
Yeah, please go ahead.
Fuck him.
Yeah.
Fuck him with every fiber of my being.
Every which way from. Yeah, God. Twice on Sunday.
Yeah. In
Dude,
all the holes.
You shared that video. I watched maybe 5 seconds of it. I couldn't watch the rest of it.
I watched the whole video and I thought to myself. So here's the context that most people didn't have when I shared the video. I had read the case early from Cassie. So I started to like Ryan Leslie's music way back in the day. And there was a rumor that Ryan Leslie, who was an up and coming, I think a Harvard graduated, like smart African American like musician, had written his song Diamond Girl about Cassie.
Oh, okay.
And that P. Diddy had destroyed his career because he wanted her, and like it was a whole like love triangle thing. At the time, it seemed like nonsensical Hollywood hyperbole, right? But then when all the accusations came out by Cassie, I remembered that moment where I was like, wait a minute, maybe some of those rumors were true. And then I was like, okay, I'll go down the rabbit hole of reading her filed lawsuit against him. In the lawsuit, she described the event you saw in the hotel to the fucking T. It was absolutely dead on accurate in her lawsuit that was filed, which meant everything else she probably said in her, not that I ever doubted her. I never doubted her.
Right.
But it just makes it that much more real when you take her attorney's verbal written, breakdown of this.
Yeah.
Filtering it down to a courtroom filing saying he did this. And this is not even near the top of the extreme things that she expresses in her filing. I mean, it is graphic. It is hard to even read. And then when you see it like this manifest in a video and you realize that it is 100% dead on accurate and that everything else said in that was likely 100% dead on accurate, you think this man is a fucking monster.
Yeah, you can't like help but think how many other people he's maybe done this to or how bad it's gotten. Seeing that video was
it was
disgusting.
Was pathetic.
It was pathetic. Yeah, I couldn't believe it, man. And I guess 50 Cent is doing some documentary with Netflix.
Oh, is it really good for him?
Over it, and he got all upset that TMZ. Odin, pull this up. Go 50 Cent documentary Netflix TMZ. Look this up. He got upset that TMZ used a fat photo of him of 50 Cent.
Oh, really?
Yeah, to promote it.
Well, he just lost a bunch of weight too, though. That's the thing.
Yeah, exactly.
He said he just worked out.
Docuseries Sultan after bidding war. Yeah.
They did use a fatter photo of him. I mean, that's just true. He's lost a lot of weight since then, though, man.
Yeah.
But
he's been all over this too. He's been like just foaming at the mouth to come. He's probably known about this for so long.
So many people in the industry have. I mean, if you look back on so many conversations about him, and look, I'll go to the extreme. I have no doubt this dude helped kill people.
I hate the fact that like he would walk around like he's on some moral high ground, right? And like you know the type of person that you are, and I mean that there's nothing more fake than that. Oh, terrible.
Yeah.
So hopefully he gets his.
Everyone, give me something else. I don't want to look at his face anymore.
Yeah, I'm done
All
with
right,
this guy.
next one. Obituary for Eminem's alter ego, Slim Shady, appears in Detroit newspaper. See this
So
side?
I did not see this, but this probably has something to do with this is how we know we're old. Haley, his daughter,
Just got married.
just got
Just
married.
Yeah,
Yep.
yeah. I don't understand the
gonna lie.
whole death of the Slim Shady. Like, I mean, I get this marketing.
Well, everybody does that, right? Every artist does that.
They usually do in the
Jay Z,
album, right?
Jay Z
They,
did it.
like,
He got
shoot
shot. He
themselves
got
or something.
killed. I think a lot of other people have done it
Jay-Z
too.
got
I
shot
think,
and killed.
yeah, in the album, right?
Like
so
the
then,
last
so
track
then he
will
went.
be-
Then he went to now. I'm Sean Carter. I'm no longer Jay Z. It's like,
I didn't know that.
oh yeah, no, a lot of this is a recurring theme for rap artists.
When Prince went to the artist formerly known as Prince,
There you go.
the symbol.
There you go.
Yeah.
I also brought this up to just see who's your favorite rapper of all time, Chris?
Ooh.
Ooh, from like a commercial success or just from like a rapper?
Like if you
standpoint?
had to choose one, I'll let Odun ask this question actually. Go
Yeah,
ahead.
just top three. It doesn't have to be in order. Let's just do top three.
Ooh. All right,
got-
so I really liked Common for just why are you rubbing your eyes? Why? No,
Why
look,
are you doing this?
because look, I
You're
know,
not bumping Common, bro. This is not true.
I love Common,
Okay.
like OG 1980s Common,
Okay. Diss track Common.
not diss track Common.
Okay. Not
Ba-
diss track Common.
Baby boomer right
Yeah.
there.
No, I look lyrically Common was good.
Does it for you.
Common, Mos Def, like those two at that genre.
Most Def is great. Yeah.
Yeah, they were actually speaking about real shit. And Mos Def fell off and got real weird. He became a citizen of the world and that whole thing.
All that thing. Yeah.
Dude,
And
he
then-
did a movie with Jack Black, didn't he? Like,
Yeah, but Mos
He was
Def,
actually not a bad actor.
Mos Def was a good 16
Oh, no,
blocks.
he was
16 Blocks was amazing.
Bro, I saw that for the first time in Hawaii, and I was like, God, I couldn't leave. I was in
Yeah.
Hawaii in paradise, and I'm watching Mos Def and 16
Right.
blocks, going like, God damn, he's good.
Right. But
But Jay-Z, obviously,
I mean, so I know we're talking about single artists. If I had to choose like one artist, and I know this is kind of cheating, but mine's more a group to listen to for the rest of my life.
Wu-Tang.
No,
What?
Tribe Called Quest. Have to.
Chocolate Quest is fantastic.
Yeah. I mean, I could literally put any of their albums on.
But they were very beat-driven, though.
Yeah, it's fine.
I think Killer Mike today is very underrated.
Apparently, I listened to an interview of Busta Rhymes
Uh-huh.
on. He did.
Also lost a shit ton of weight recently.
Yeah, he had to for health reasons. I saw him do an interview, I think, with All the Smoke, with those guys,
Mhm.
and he was talking about Tribe Called Quest, and they were saying like they're basically the Dre of Q-Tip is the Dre of the East Coast, except he never handled it like a business. So he didn't want to sign people and own their masters and whatnot, but he was really big on like propping people up.
Yeah, and he was a great lyricist too. I mean,
Yeah.
Q-Tip was good. He's
Yeah.
some of my favorite songs.
I love it. So for me, it's Tribe.
so I'm not in with the new music, obviously, but it's like
Your pop
Kendrick
culture.
Lamar or J. Cole, like in the top.
No,
I think a lot of people gravitate towards J. Cole. They like him a lot. I think poetically.
I think first of all, he seems like a really good dude. Like, have you ever seen like his story and how he like carries himself? Like,
Mhm.
he just seems like a good, normal dude who just happens to be like a rapper, but doesn't take himself as like a gangster rapper. You know what I mean? Like, he's not that guy.
I mean, he lost a lot of cred with me, bro,
Why?
over this whole Drake and Kendrick
Because
stuff.
he didn't want to be in the party.
Well, he
or-
started it. He's like, "All right, Drake, let's do this together." And then he's like, "Wait a minute, I'm gonna back out. Go ahead, Drake, handle it on your
Oh,
own."
I didn't
now."
know that.
I was just like, "That's kind of weak,
What do you mean?
bro." Imagine if you and I get into a fight with somebody, and then you be like, "You know what, guys, my bad. I'm just gonna leave," and then you leave me with fighting everybody by
That sounds
myself.
exactly like something I would do.
I know it
Yeah.
would.
Yeah,
He's- He's laughing.
that sounds exactly like what I would do. As a matter of fact, that's probably what I would do.
Yeah.
I'm gonna fuck you up. Sorry,
Yeah.
take care of this. I'm gonna get the car.
All right, next one. Social media users are collectively blocking celebrities and influencers who have been silent on Gaza. Have you guys been?
I've
This is
heard
such
of
a
this?
weird ass way of handling it.
Yeah, dude.
Hashtag Blackout 2024.
Okay,
Yeah.
so if you don't, so if you're, here's what I don't like is I don't like this like constant. You're now positioning yourself against like Israel and Jews and like you're supporting. Like, I'm not saying anyone's right or wrong, and here's what I don't like how we're labeling people.
Yeah.
Because let's be honest, the people who are making these decisions, like I don't have any control over what Biden's going to do in the White House.
Mm-mm.
I voted for my elected official, but let's be honest, electoral college votes. You're going to say you hate Americans and include me in that because the president does something?
Yeah, exactly.
There's a lot of innocent people here who had no involvement in this.
On both sides.
Yeah.
Yeah.
And then so now it's people supporting this, people supporting that. There are so many people who want to go through life and don't want to support a cause because here's a problem if you're a celebrity. You support one side or the other in this, you're fucked.
You can't, exactly.
You will lose people either way.
Yeah, exactly. You will lose friendships, you will lose potentially jobs.
Yeah, if you don't stand up for this, Chris, you're not saying, dude, maybe a celebrity smart enough to go, you know what? I'm supposed to be pretty. I'm supposed to memorize lines and get in front of a screen and act. Yeah. I'm not smart enough and educated enough to really speak on these matters.
But people shouldn't be getting like, for instance, I know one really big one that's been going around is, this Miss Rachel YouTube star that's like basically the Blippi for another Blippi, right?
I didn't know that.
Yeah, she's pretty big time. She's like has a massive following, and she, I guess, raised a bunch of money and donated to the kids of Gaza. Okay, so you're like, so kids that are suffering. How are you gonna try to cancel her for donating to kids? Like, okay, if she's donating to the kids of Israel, would that be okay? Like, so it's...
Well, I mean, look, if you want to do it without stigma, you donate to both.
Yes.
Right? And I don't think there's anything wrong with that.
But it wasn't just that. I guess it was a bunch of different countries. There was also Ukraine. It was... Odin, do you know how many other countries there were?
That's tough. Like, look.
Yeah, it was like 4 or 5 different countries.
Yeah, and you're like, okay, like, we don't need to cancel her. Look, it's clearly trying to do like a good... This girl has literally devoted her life. She's made a very healthy living. I'm not saying she's doing it for free, but it's like, what, we're going to try to cancel her for donating to a cause that's for kids?
What bothers me about all this stuff is that people automatically assume just because you want to help a group of people that you're automatically against the other group.
Taking a political stance.
Like it doesn't... I get why people get frustrated. I know Jewish people that are afraid to be out in public now.
Mm-hmm.
I know Palestinian people who are afraid to wear like stuff that support Palestine.
Absolutely.
And it's just stunning to me that you can't support one side without being like demonized.
I mean, to your point earlier, I remember there was a time when U.S. had invaded Iraq, right? Mm-hmm. And I had family. I was going to go visit family in Germany. And they were like, hey, man, people are going to probably pick up pretty quickly that you're American, but don't come around here like flaunting it, right? Because it's a real problem. And I'm like, well, I didn't do any, like, why me?
So you didn't wear your American flag?
So yeah, I didn't get to wear my American flag hat. Exactly.
Gotcha.
But I'm like, come on, man. Like, I don't know. It's becoming a bit much.
Haroon, Sharon Stone, is that the next one?
Yeah, it is.
That's weird. That's a pivot.
Sharon Stone.
She's got like a crazy high IQ, by the way.
Sharon Stone, Liam Neeson want Kevin Spacey to return to acting despite new allegations.
I can't wait to see Kevin back at work. He's a genius, Stone said in a statement. Okay, let's move on.
All right.
Yeah, we're not touching this.
I'm not. Yeah, he's already touched it. OpenAI unveils newest AI model GPT-4o.
This was fucking amazing.
I shared this with you guys over the weekend.
Dude,
too.
have you seen the real-time translation?
Yes.
They put it in a table, and one person speaking English, the other person speaking Spanish, and it translates for them speaking to one another in real time.
Yeah.
It's incredible.
I mean, this is a good way to bring it full circle, right? Top of the show. Okay, I mean, like, how are we going to implement this? I mean, you can clearly see there's ways to use it and utilize it.
Oh, yeah.
Right? But also, is it going to really replace as many jobs as they said it was going to?
Right now, it's a little gimmicky in some ways, but yes, I think it will. I think there's a lot of things from a data perspective. The data capabilities of using a plugin with ChatGPT 4o, I think is what they're referring to it. It's really weird, the little zero.
Yeah.
They're fantastic.
I personally think that it's going to be something that everyone's going to need to take some type of course on and be able to use. No different than if you're applying for a job and you need to be, efficient in, all Microsoft tools, right? Like Excel. Like if you don't know how to use Excel, then we got a real problem here, right? If you're applying for a job, especially in the finance space, like you're going to need to know how to use AI to your benefit for a job.
There is a ChatGPT plugin that it's called, I think, Analyst or something like that.
Mm-hmm.
and it literally does the Excel work, like the basic Excel work
I
for you.
can't remember what it was, but there was something going on at work where I needed to draft a formula, and I literally was like, "Hey guys, let me just ask ChatGPT to do it, see what," because I didn't know how to formulate the formula,
Mhm.
and I asked it to, and it spit it out. I didn't even know how to ask it. Right? I just said in real basic terms. This is kind of one. These are the 3 data fields that I have. This is the formula that I kind of need for it to do.
Yeah. Shocking how quick it is,
And
right?
boom, gave it to me. I'm like, "Hey guys, I was able to figure it out."
Then you ask yourself a question like, why do I even spend the time to think about this shit anymore?
I know, but doesn't it scare you? Like, do you just become dumber?
No,
'Cause I think I think like no different than like back in the day when people knew how to get around places, and then you had MapQuest, and now all of a sudden like a lot of people can't get anywhere unless they have their phone GPS with them.
Okay, if you're choosing not to be cognizant of your environment, like so you got a formula from Excel
Mhm.
for Excel, right? You now have an idea of what that formula is, right?
Yes,
If you had to repeat it or try to repeat it, you would probably be more familiar with it now than you were before, right?
I think most people they don't. I don't think people look at it that way. I got the instant gratification. I got what I needed. Now I'm gonna bank it, and I'm gonna know if I ever need something, I'm gonna go back to there again. Because I got it there
Mm.
last time pretty easily. I'll probably get it easily again next time.
We're talking about ChatGPT, right?
Every time.
It sounded like something else.
You always.
Did you say you were at the Bunny Ranch?
No, my name is not Lamar Odom.
Can you imagine him walking in? Just like, how does that even go down? Like, really?
Yeah, come on, man. Again?
Yeah. We know your money's good here, bro.
Yeah. Kobe's money.
Yeah, it's not good.
Yeah.
Yeah. All right. Well, Arun,
We have one last thing. It's a review, but it's the screenshot that I have is only half of it.
why do you only have half of it?
What? A review? What we got here?
Oh, did we not delete this from last time?
Oh, we talked about this.
Yeah, it's
It was the
from
one. It
Canada.
was the one from
Yeah.
Canada. Yeah. Shout out to the listeners from Canada. Leave us a review. If you haven't left us a review, go over and do it, man. Come on.
It wouldn't be a normal show if Arun didn't remind us that he doesn't listen to the show.
Yeah. Sure.
You know,
He's so proud of it too.
I like the good old fashioned regular show for us. I think it's good.
It felt good.
It's plus it's been about a week and a half since because we did the trip to New York and everything else in between.
Mm-hmm.
Yeah. So
Basketball season starting up again.
again,
I know, man.
you just got a trophy. You're gonna devalue the trophy by going right back into another season.
I swear. I got 10 players this time. You know what I like about having 10 players?
No, but I'm sure you're gonna tell
Oh
me.
no.
Substitutions are easy. 5 in, 5 out. Let's go. I don't
Alright.
gotta
Is
hurt.
Adam a starter?
I don't gotta hurt feeling. No, not unless he earns it. I don't like to hurt feelings and say, hey, you stay, you're out. This is so much easier. Easy break. You got you 5 that are in are coming sitting down. You 5 that are sitting are now going in. No feelings are hurt.
Well, Arun, I'm glad that you'll be my new co-host.
What do you mean?
You'll be coaching.
I did it last season.
I have a feeling you're gonna get murdered by one of these parents someday.
No, they all love me. I get hugs all around.
Right until they don't. Yeah.
What do you think is gonna happen?
Hey, man.
No, this isn't club, man. This is rec. Rec, people don't
Look,
take it as seriously.
Don't use like abbreviations for hip terms with your basketball lingo shit here, okay?
What do you mean?
This is not a club. It is a
Honestly,
rec.
okay, let me tell you right now, man.
Don't do this.
Club basketball for these kids, or forget club basketball, club sports
Mhm.
it's out of control.
It's a business.
It's gotten out of hand,
Yeah, it's business.
and they're literally working these kids as if they're professional athletes, and you're
Yeah,
like,
they're farm teams.
and I'm looking at these kids. I'm like, are you enjoying this?
So you're going to put Adam in club sports, right?
No,
That's not true.
no. I'm
Yeah,
not. Not until the love is really there. And if it doesn't get there, no, I won't.
He has a shooting sleep. He loves it.
Yeah, he does. He does love it, but he loves it. He loves the idea of it. He doesn't love it yet. Where he's waking up or training on his own. If I'm in the living room and I notice that the whole day's gone by and he hasn't really done anything, I'll say, "Hey, you feel like practicing today?" He'll be like, "Oh yeah, I'll go practice." Like you if you loved it, you would have done it on your own, right?
Wow. You passively aggressively peer pressuring him into working on stuff.
I'm just like, no, you're gonna act, and then we're gonna get to practice, and you're gonna be like, oh, because we'll get to practice on days like he doesn't, because I won't do it every day.
I can't wait till you bring lunch to my office next time. Hey, Saied, you can put that fork down?
No, I'm not. I'm gonna keep eating this.
Then you're not ready to play in the game, brother.
Really?
Yeah.
What game?
Takes commitment.
Which game?
Trimming down.
trim it down.
Yeah. Do what I do. Just don't eat.
It's so easy.
It's so easy. 1 shot a week.
Nice.
You just don't eat.
How long? How long are you gonna do this for? Forever?
I have to get on a scale at some point in time, figure out how much I weigh.
You just want to be surprised? Is that what it's really a scale thing, a number thing for you?
No.
I thought you were gonna. Are you gonna do another DEXA?
I'm gonna do another DEXA. I want to see if my visceral organ fat has come down.
I mean, I know that was the driving factor
That was
here.
that in my my cholesterol and my A1C. I want to see if a significant weight loss will improve those biomarkers, which I think it will. But
So I'm getting hit up for using club and rec and using A1C and biomarkers and this and that.
I feel like our audience will probably relate to A1C versus
club and rec.
Yeah.
Come on, dude. Give the audience a little bit more credit here.
I'm pretty sure most of them are like, what?
What?
That's that what? Haroon, you got anything of value before we say goodbye?
Nope.
You pretty fast in the nope there.
Yeah,
You want to think about it at all? Or?
He's just like, nope, hurry up. Let's get on out of here.
We're about to hit 130.
No, it's 119.46, 47,
Round it
48.
Bro, why do you care, bro? You're putting it on. You left it on camera 120 minutes ago.
I know. We haven't seen the
Oh,
light
fuck
switch.
you guys. No, I did not.
Fuck you. Good night, everybody.
Okay, bye.